A worker is paid 10,000 per month and dearness allowance 2,000 per month. Workers' contribution to Provident Fund. Provident Fund is 10%. Employer also contributes the same amount as the employee. ESI premium is 6.5% of wages, of which 1.75 is paid by the employees. It is firm's practice to pay 2 months' wages as bonus each year. The number of working days in a year are 300, of 8 hours each. Out of this, a worker is entitled to 15 days leave on full pay. So we have to calculate the wage rate per hour for costing purposes. So first we got the working note. We have to find the net productive hours. For that, number of days in a year are 300. 15 days leave on full pay. So we deduct it into 8 hours each. So the net productive hours is 2,280 hours. Now, the rate per hour. So the basic pay to a worker is 10,000 per month into 12. So for a year, 1,20,000. Dearness allowance for a 12 months is 24,000. So we got the wages, which is 1,44,000. Now we can see the other cost. Workers' contribution to Provident Fund is 10%. Employer also contributes the same amount. So employees' contribution to Provident Fund is 10% of wages. So wages is 1,44,000. It's 10%, 14,400. The employer also contribute to ESI contribution premium is 6.5%. 1.75 is paid by the employees. So the remaining will be paid by the employer. 6.5 minus 1.75, the 4.75 is paid by the employer. So 6840. Now the company, there is a practice of to pay 2 months wages as bonus each year. So bonus is 2% of wages, not 2%, sorry. 2 months 2 months wages as a bonus each year. So 2 by 12 into 1,44,000. So the bonus is 24,000. Now we got the total cost, which is 1,89,240. We have already find the net productive hours. So 1,89,240 divided by net productive hours, we got 83 is rate per hour. So we have found the rate per hour. Okay, next question. In a factory, working 6 days working days in a week, 8 hours each day, worker is paid at the rate of 100 per day basic plus DA at 120% of basic. He is allowed to take 30 minutes off during his hours shift for meal break, 30 minutes break, and a 10 minutes rest for rest, 10 minutes rest. Okay. During a week, his card showed that his time was chargeable to job X, Y, Z as 15 hours, 12 hours, 13 hours. The time not booked was wasted while waiting for a job. State how would we allocate the wages of the workers for the week? First, I found the net productive hours. Total 6 days into 8 hours. So 48 hours is total hours minus the normal wasted time or like normal idle time. That is 30 minutes break and 10 minutes rest. So it is given in minutes. So I divided by 60 to make it in hours for 6 days. It is 4 hours. Okay, I'm drawing too much. Okay, 4 hours. So the net productive hours is 44 hours. And now the working note 2 shows the rate per hour. Basic pay is 100. In the question, basic pay is rupees 100. So 100 into 6, 600 for a week. Okay, where is it? 6 days in a week, 8 hours. So 600 into 6, 600. Plus DA, it's given at 120%. So DA at 120%, it is 720. Divided by net productive hours. So we got rupees 30 as rate per hour. But there is abnormal loss. The time not booked was wasted while waiting for a job. That is abnormal loss. So net productive hours was 44 hours. We find here net productive hours was 44. Now the hours worked is job X, Y, and Z. X 15 hours, 12 hours, 13 hours. So adding up to 40 hours. 4 hours wasted. So it will be debited to costing P&L. 4 into 30, 120 is abnormal loss. So now the answer, the allocation of wages. Okay. Job X 15 hours. We found the rate per hour is rupees 30 is rate per hour. So for job X 15 hours into 30 450. For job Y 12 hours into 30 360. For job Z 13 into 13 390. Then the abnormal loss is 4 hours into 30 120. So total 40 hours 13320. Next question. The accountant of Y Limited has computed employee turnover rate for the quarter ended 31st March 2021 as 10%, 5%, and 3% respectively, under flux method, replacement method, and separation method respectively. If the number of workers replaced during that quarter is 30, we have to find out the number of workers for the quarter recruited and joined, left and discharged, equivalent employee turnover rates for the year. Okay, we got the following details from the question. The computed employee turnover rates are 10%, 5%, 3%, under flux method, replacement, and separation. Flux, replacement, separation. And the number of workers replaced during that quarter is 30. So 30. First, we have to find the average workers by putting this formula. The question is given 5% replacement. So in this formula, we get the number of workers replaced by average into 100. We will get replacement 5 is equal to 30 by average into 100. So we got the average is 600. Now second working, we have to find the number of workers separated and left and discharged. So workers separated. By this formula, number of workers separated by average workers into 100, which is by this substituting the formula, we got number of workers left and discharge is 18. Now the question says number of workers newly joined. We have to find number of workers newly joined. By flux method, we have already found what is separated, number of workers separated and replaced. Now substituting in the formula, we can find n. It is newly joined. That is 12. Now we have to find in the question recruited and joined. Number of workers recruited and joined. The number of workers, this is 30 is replaced, but they are already recruited in past. The number of workers newly recruited is 12. So total 42. Number of workers left hand discharge is already 18. We found here. Left hand discharged. Separation method, by applying this formula, we got 18. Okay. Employee turnover rates for the year. See, the question said they found the employee turnover rates for the quarter. So there are 4 quarters in a year. So into multiply by 4. 40%, 20%, 12% are the employee turnover rates for the year. So simple. Next question. A Limited produces product A which passes through two processes before it is completed and transferred to finished stock. So there are two processes, process 1, process 2, then finished stock. The following data rates are for the month of October. Okay. Opening stock is for process 1, process 2 and finished goods. Direct materials, direct wages, factory overheads, closing stock. Inter-process profit included in opening stock. That is for process 2 and finished goods. Okay. Output of process 1 is transferred to process 2 at 25% profit on the transfer price. Then output of process 2 is transferred to finished stock at 20% profit on the transfer price. Stock in process is valued at prime cost. Finished stock is valued at price at which it is received from the process 2. Okay, sales is 1,40,000. Okay. There are process 1, process 2, then finished goods. The process after completing process 1, it is transferred to process 2, then it is transferred to finished goods. While transferring the process 2, it's stating the question said that 25% profit on transfer price. With the 25% profit is transferred to process 2. Then from there, process 2, after the finishing the process 2, it is transferred to finished stock at 20% of profit. So which is transferred from process to finished goods at 20% of profit. Okay. Okay. Question. Prepare process cost account, finished goods account, showing profit element in each stage. Okay. First is process 1 account. We have a particular total cost profit. Here also particular total cost profit. The opening stock. Opening stock for process 1, 7,500. 7,500. Then material wages 15,000, 11,200. That also I write. Then after adding this, we got the prime cost. Material wages opening stock, we got prime cost. Then factory overhead, the factory expenses. We add that, we got the total cost. This is 44,200. Also there is now we took opening stock. I took direct materials, wages, overhead, closing stock. Closing stock is 3,700. That also I got. Now the transfer price. The output of process 1 is transferred to process 2 at 25% of profit on the transfer price. See, we have to find the profit. For that, the transfer price is 25% of what? 25% profit on the transfer price. So the transfer price is 100%. So the profit is 25% as per the question. So the cost will be remaining 75%. Cost plus profit is transfer price. So the total cost is 44,200. We have to find profit. But the closing stock of 3,700 is not transferring. No, not transferring to process 2. So we have to minus 3,700 from our total cost. So 44,200 minus 3,700 because the closing stock is not getting transferred to process 2. Now by calculating 4,500 into divided by 75, we got 13,500 as profit by balancing and balancing figure. We got this as balancing figure. And on the process 1, there is no profit. We already incurred cost. After taking the profit of 25% transfer price, we transfer it to process 2. Okay. Now on process 2. Process 2, the opening stock. Let's start the opening stock. At process 2, opening stock is 9,000. Opening stock is 9,000. Then it's there is a 1,500 inter-process profit included in the opening stock. So we got the profit inter-process 5,500. So the balance is 7,500 is cost. Then from process 1, we have transferred to process 2, 54,000, 4,500, 13,500. That I received here 54,000, 4,500, 13,500. Then, okay, material for process 2 is 15,750, 11,250. That also returned. Then adding this, I got the prime cost is 90,000, 75,000, 15,000. Then factory expenses is 4,500. That also I read. Then I received the total cost. And one more thing is closing stock of 4,500. Closing stock 4,500. Now the question is saying that output of process 2 is after the completing process 2 is transferred to finished stock at 20% of profit on the transfer price. At 20% of profit. Here also the same method. Cost plus profit is transfer price. If the transfer price is 100%, then the profit is 20%. Cost will be 80%. We know the cost. Total cost is 94,500. But here also closing stock of 4,500 is we are not transferring it. We are not transferring it to finished stock. So we minus it from the total cost. So 94,500 minus 4,500. So we get 90,000 by this mathematical application. 90,000 into 80. We get 22,500, 22,500 as profit. See, this is a mathematical application, that ratio and proportion. See, some value is in the ratio 80 is to 20. Proportion, what is 90,000 is to x. This basic mathematical application. Ratio. You can use the calculator and find the, here we find the profit. Now there is one thing. The question is also stating that stock in process is valued at prime cost. Here is stock in process is closing stock. Okay, stock in process valued at prime cost. So we have to find the cost of the closing stock by this, applying this. This also said stock in process is valued at prime cost. So our prime cost is, I am too much drawing, sorry for that. Okay, prime cost is this. So the closing stock 4,500. Then what will be the cost and the closing stock? So by applying this 4,500 closing stock, total closing stock, total into 75,000 by 90,000. Here also the basic ratio application, mathematical application. By applying that 4,500 into 75,000, 90,000, 3750, I got it. So we got that. After that we have to total it, add this, and total we got, and by balancing it we got what's transferring to finished goods. So these are transferred to finished goods. Now finished goods account. The opening stock of finished goods account is 22,500. Closing stock is 11,250. 22,500 opening stock, closing stock 11,250. Inter-process profit included in opening stock is 8,250. Inter-process profit 8,250 we added. Then we get balance it like cost plus profit is total. So 22,500 minus 8,250 we get 14,250. Then transferred from profit process to. Here from process to we transferred to finished goods. That will appear here. Sorry. By process to we got 1,12,500, 75,750, 36,750 from here. 750. Okay, the total cost is 1,35,000, 90,000, 45,000. So we have to find the profit. So by the cost plus profit is equal to sales. Cost, okay. Sales during the period is 1,40,000. So we got the sales 1,40,000. So our cost plus profit is sales. Sales is 1,40,000. We have to find the profit. The cost is 1,35,000. But here also the closing stock is not included. Closing stock is 11,250. So we subtract it from the total cost. 1,35,000 here, 1,35,000 total cost minus 11,250. We got the actual cost is 1,23,750. When we subtract from this, we got the profit 16,250. Then total it, balance it. Okay, here one more thing is closing stock valuation. The finished stock is valued at the price at which it is received from process to. Finished stock, we have to find this value. It is valued The stock in process was valued at prime cost, but here the finished stock is valued at price at which it is received from process 2. The price at which it is received from process 2 is this. So by applying the mathematical application, we can find this numerical by 11,250 the total costing stock into 75750 by 112,500. 11250 into 75750 by 112,500. We got 7575 as cost. Here profit we can balance it and find out. Then this also balancing here we can find out. Next question. The following information was obtained from the records of manufacturing audit using standard costing system. Standard and actual. Standard means budget. Production, working days, machine hours, fixed hours, variable hour. Production is 4,000 units is the budget. Actually 3,800 units were made. 20 within the 20 working days were the budget. 21 days was required. 8,000 work hours were budget, but only 700 800 hours were actual. Fixed overhead was 4 lakh was standard. Actually 3 lakh 90,000. Variable overhead is 1 lakh 20,000. 1 lakh 20,000. So we have to calculate the variable overhead variance and fixed overhead variance. First, I can find the fixed overhead variance. Fixed overhead variance. Okay, I wrote it once again. The 4 lakh is budget, actual 3 lakh 9,000. Units were 4,000, 3,000 were actual. It took 21 days and 7,800 hours. So I made a standard rate. Standard rate is 1 unit 100. How I got is 100. 4 lakh divided by 4,000. 100 per unit. 20,000 per day. 50 rupees per hour unit. Why you can divide it and find out. Fixed cost we have to find about fixed overhead cost variances. Fixed overhead cost variances. Fixed overhead cost variance is absorbed overhead minus actual overhead. The absorbed is 3,800 units into 100 rupees 100 minus the actual overhead. Actual overhead 3,90,000. We got 10,000 adverse, which is adverse. Fixed overhead expenditure variance, which is budgeted overhead minus actual overhead. The budgeted was 4 lakh minus all actually 3 lakh 90,000. This is 10,000, which is favorable. See the F and A here is means F means favorable, A means adverse. When then the after calculation when positive is coming, it means it is favorable. Minus means negative means it's adverse. Okay. Fixed overhead volume variance, which means absorbed overhead minus budgeted overhead, which absorbed was 3,800 into 100 per unit. So 3,80,000 I think. 100 into 3,80,000 minus the budgeted was 4 lakh, standard 4 lakh. So I got 20,000, which is adverse, negative figure. Fixed overhead efficiency variance. So standard hours for actual production minus actual hours into standard rate. So 7,600 minus 7,800. It's given 7,800 hours into 50. This 700, 600 how I got means 8,000 hours for, sorry, okay, 8,000 hours for 4,000 units. So how many hours for 3,800 units? So 8,000 hours for 4,000 units. 8,000 hours for 4,000 units. So for 1 unit 2 hours. Into 3,800 units were actual. See, actually 3,800 units were on our okay. Okay, actual 7,000 units were 3,800. So 800 by 4,000 for 1 unit into 3,800. So we got 7,600. The difference and multiply by 50, we got 10,000, which is adverse. Efficiency is adverse. Fixed overhead capacity variance, which means actual hours minus revised budget hours into standard rate. So actual hours was 7,800 minus revised budget hours for it took 10 to 21 days for 8,000 by 20 and 21. The difference in the multiply by 50, we got 30,000, which is adverse. Fixed overhead calendar variance, how many days? So budgeted days minus actual days into rate per day. That is 20 minus 20. It was budgeted 20 days, but it took 21 days. Budgeted minus actual into rate per day. 20 minus 21 is 20,000. See 20,000, which is favorable. Then variable overhead variance is standard minus actual. Standard was 1,20,000. 1,20,000 for 4,000 units was standard into actual was 3,800 units. So then minus actual overhead, we got 6,000 is adverse. Variable overhead expenditure variance. Standard overhead time for standard overhead minus actual overhead. So 1,20,000 by 8,000 into 7,800 were actual hours minus actual overhead 1,30,000 was the actual variable overhead, which is 3,000 adverse. Variable overhead efficiency variance also standard hours minus actual into standard rate. 7,600 calculating per unit into 8,000 for 4,000 means for 3,800 how much? By that we calculated it by 700 600 hours minus the actual hours taken into standard rate. We got 3,000, which is adverse. That's it.